What's going on, guys? I want to give you guys the mindset difference between going with the trend and against it. So what we're looking at on the right hand side of the screen is a 5-minute time frame on the NASDAQ futures. On the left hand time frame, we're looking at the 15-minute chart. So from the open, after the initial sell-off, it's been a long biased sort of market. So what you're wanting to do is stick with the bigger, higher time frame trend, and you're trying to identify and snipe positions where you can stay with that trend, because even if your entry is slightly off, you're going to have a higher success rate of actually winning the trade than if you're going against a trend. When you're going against a trend, so a lot of times when you're playing inversions or you're playing, let's say a double top looking for a back test into support or something like that, your entry needs to be a little bit more precise. But the one thing and the point that I want to bring to the table is that I took 2 trades right now within this last hour going into the New York close. Now I took a short position, and there's a big but, I took a 10-point take profit through 21,429. So I had a stop sell order sitting right there. As soon as we busted through on this 5-minute candle wick, it flushed from my entry price of 429, okay, from 429 down to 414, okay? So a quick fill on that price, okay? So from 30 to, let's call it 30 to 15, you're looking at 15 points, give or take. This average range of this candle from high to low, the entire range from the high to low was 23 points. So again, taking this from 29 to 19 was 10 points, and it dropped to 14 and immediately shot back up, tried to break lows once again, and then exploded. So here's the problem that a lot of people run into, and I run into this problem still, even today, right? But I'm just more experienced enough to tell myself, don't be an idiot. Have realistic expectations. If I'm interested in a position that's going against a trend, I need to tell myself I have to treat this nothing more than a scalp. It now goes from not just a higher probability edge trade, it goes to a lower probability trade. And I have to understand that if I take this trade, I'm looking to get green, I'm looking to get out, or I don't take the trade at all. Okay. Now, if you don't take the trade at all, you miss the opportunity of maybe this is going to be a complete breakdown into the close where we do drop into this initial balance high zone. If that's the case, then you just miss out on the trade altogether, and it is what it is. You just walk away unscathed. Because I wasn't looking for this to, hey, if we lose this area, it's got to come down here. It's got to fall all the way down to the lows. No, I just thinking to myself, if we lose this 429 area, which acted as an area of a break and retest here, followed by this high, and then we had some consolidation, some more consolidation, and then finally it busted through. So there was a very clear level here, a line in the sand that was holding. And if it got broken, there was some potential that maybe we could pick up a quick scalp on, right? So this is what I told my community, is that I posted this screenshot and I says, if we break 429, I'll be looking for a 10 to 15 point scalp. And we went down about 15 points, give or take, depending on how fast you exited or what your take profit bracket was. But in this particular case, you're not necessarily looking for a 50, 60, 80 point move. You're going against the current. So always keep in mind, and this is the moral of the video, if you find a setup that aligns with a particular level, or it aligns with your strategy, or it's something that you have played in the past, but it's going against a higher time frame trend, your mindset has to go to, I need to get into this trade, execute on the dot, and get green and get out. If it doesn't go in my favor, instead of holding or dollar cost averaging in or adding to a losing position, if this snapped in down 5 points and snapped back up over this range, I would need to cut the trade, and you have to be okay with walking away with that loser. Now, here's an example of, let's say you stay with the higher time frame bias. You allow this pullback to continue to pull back and pull back and pull back and pull back. And you were to tell yourself, okay, well, here's a low that got put in, right? Here's a low through this line in the sand. Here's a little bit of a bounce, and now here's a higher low. So now you've got these 2 areas here where you put in a higher low, you've got this range down here. You could ultimately use this as a floor, that if price breaks down below this level, that's your exit, okay? If we break down below this floor we created. Now you're creating this floor by using this level as an indicator to say, once this level gets broken down, if there's a bounce into this range and a higher low, now I have a definitive stop loss. You could essentially get long anywhere back over 430 and ride this for a much bigger profit than someone who, like myself, took it for a very quick scalp from here to here for 5 points. Now, once we got back over this little swing high that came off of this bounce, off of this higher low, I got in here, okay, on the break back above the 20 SMA. And if you look at this price point here, we're getting in back to this trade over 446. This trade within a matter of 10 minutes goes all the way to 470. So this is a much larger trade with a higher probability of a win rate because you're staying with your higher time frame bias. So the moral of the story, if you're going against the trend and you're going to absolutely decide to take the trade, it's got to be a scalp. Get in, get green, or cut the position is immediately once it shows you any technical breakdown, or don't take the trade at all and wait for the reclaim of that level that you lost. Okay, now you've got a very definitive and clear stop loss. You're showing that price action is going to hold that previous area that was just broken down and tested. Maybe there was some sweep of some stops there, grabbing some liquidity to reverse back up to the upside, and then you're able to capture all of this for a lot quicker and a larger of the move, because ultimately you're staying with the trend. You're staying with the uptrend, right? You're not trying to fight the trend. If the trend is higher and this because it's pulling back and just because it sweeps this level, it's nothing more than a scalp, guys. It's not a, oh my gosh, we're going to break down and go down 200 points. Can it? Absolutely. But at the end of the day is I would rather try to just take a little cherry on top here and scalp this for a quick move and wait to see if it's going to continue to break down. And then I can always take another entry through this little trend line here if it did something like this, right? Now I can take that and double back into that same trade. If this holds and we reclaim this area that we lost, well, now we can choose to get in long back here in this consolidation, and we can use a stop below this zone once again to capture a much larger scalp. So again, stay patient, guys. Understand what you're looking for before you execute the trade. And that's a big problem that a lot of traders tend to have, is they are not fully understanding what the expectations are going to be if the trade doesn't work out, what the expectations should be when you're going against the trend, what you should be looking for when you bounce off of demand with the trend. So with that being said, hopefully this provided a little bit of an insight. If you guys want to join the free trading community that we've been building at Evolution Traders for the past 5 years, it's completely free to join. That link is down in the description box below. We do have an option for live trading Monday through Friday if you guys are interested in that. Also, guys, 90% off Apex evaluations. Use code DAnthony. I will see all of you guys on the next video. Make sure to like, comment, and subscribe to the channel, and I'll catch you guys on the next one.